business combination subsequent to date of acquisition. Okay, so this will be our discussion for today. Let's see if the pen is working. All right, so we will be talking about what happens, okay, on the period or on the year after the date of acquisition. So what is this all about? In our first discussion, after the introduction on business combination and our discussion on PFRS 3, okay, we made a discussion on business combination at the date of acquisition. So if this is your timeline, what happens at the date of acquisition? Okay, syempre, if we're going to consolidate financial statements, we will only have your balance sheet. Okay, so bakit ganon? Because at the date of acquisition or at the date of combination, there are no results of operations yet. Okay, there may be results of operation, pero they don't belong to the combined entity yet. Kumbaga wala pang parent-subsidiary relationship at that time. So it will not be included in the consolidation. But then after some time, no, assuming na dito yung business combination, and then after some time, okay, so after 1 year, may operation na. And you're going to prepare your consolidated financial statements. As of this point, you're going to prepare not just your consolidated balance sheet, no? Pero complete set na yan, which includes, of course, your income statement or your statement of financial operation. So ano pong difference nito at the date of acquisition? At the date of acquisition, we're just going to consolidate the elements found in your balance sheet. But subsequent to date of acquisition, not just on balance sheet, but also in your income statement. So dati, our common question is how much is the goodwill, what is your consolidated total assets, okay, or consolidated total liabilities and stockholders equity. In addition to this, no, may dadagdag na ngayon yung how much is our consolidated net income or consolidated net income as far as the parent is concerned. Okay, meron ba yung mga ganun, or equity of the parent in the CNI, how much is the total CNI, or how much is the minority interest net income, also known as the non-controlling interest in the net income of the subsidiary. Okay, so ayan, you also have your consolidated retained earnings. Okay, and these are just some, no, of the common questions, okay, under this topic, business combination subsequent to the date of acquisition. Okay, so ayan, aside from that, okay, we will also be discussing the cost method and equity method used in accounting for your subsidiary. Pero mamaya na yun. As of this point, ito po yung main difference ng date of acquisition and subsequent to date of acquisition. Okay, so let's continue. Methods of accounting for share investment. There are two methods. You have your cost method and you have your equity method. Now, under PAS 27, it states that, okay, under the cost method, sabi niya, an investor's investment in the investee account is recognized at cost. Okay, what does that mean? Okay, it actually depends on the interpretation. No, before this is interpreted as madali lang. Okay, based on your acquisition cost, that should be the value, okay, of your investment in subsidiary. Kaya kung may T accounts ka, ayan, using your cost method, your investment in subsidiary, okay, will have the balance, no, based on its acquisition cost, kung magkano mo siya binili. Okay po. The investor recognizes income from the investment only to the extent that the investor receives distributions from accumulated profits of the investee arising after the date of acquisition. So, ano ibig sabihin yan? If your subsidiary declares dividends, okay, the parent is going to record debit to cash and credit to dividend income. Ayan. Okay, for the share in subsidiary and subsidiaries declared dividends. Okay po. Dividend distributions received in excess of such profits are regarded as recovery of investments and are accounted for as a reduction in the cost of investment, like a return of capital or liquidating dividend. Okay, so what is the meaning of that? Okay, let's review this first. Under the cost method, your investment in subsidiary will have a perpetual balance. Okay, what is the balance? The acquisition cost, because it is accounted for at cost. Okay, so if this one is acquired at, let's say, 1 million, okay, at the date of acquisition, subsequent to date of acquisition, this will always be 1 million. Okay po. In the process of recognizing income, no, if the parent if the subsidiary declares dividends, okay, the share of the parent will be recorded as dividend income. Now, what is this recovery of investment, okay, or dividend distributions in excess of such profits? It's like this. For example, your subsidiary's net income is, let's say, 100,000. Okay, it's 100,000. Okay, and then let's say that the dividends declared, no, is 50,000. Okay, laki. No, and let's say the parent owns, let's just say, 80%. Okay, so 80% of the net income will be 80,000. This one will not be recorded under cost method, and 80% of the dividends will be 40,000. This one will be recorded as dividend income. So let's assume this one is for year 1. Okay, so this is for year 1. And then in year 2, okay, let's say that the subsidiary's net income is 50,000. Okay, 50,000. And then the dividends declared, paano ba to? O let's say the dividends declared is 60,000. Pwede ba? Yan. So, the parent share here is how much? It will be 80% of this is 40,000. And then, 80% of this will be 48,000. Okay, so, pag tinitignan mo, no, you now have an excess of 8,000. Okay, now, please follow because based on other books, may iba-ibang treatment dito. If you try to look at this, sasabihin nila, uy, wait lang. Okay, this is the profits or the share in the profits, but then this is the amount received. Therefore, 8,000 should be the return on investment. And that one now will be credited, okay, as the return on investment. So that will now reduce your investment in subsidiary. Now, there are also some books, okay, na ang gagawin ay 80 plus 40, that will be 120,000. While this one is 40 times, plus 48, you will now have 88,000. And this one, no, if you try to compare, wait lang, the cumulative profits from the date of acquisition is 120 and the cumulative dividends received is only 88. There is no return on investment yet. Okay, so wag kayong malilito. So, sir, ano po yung tama? Are we going to record a return on investment of 8,000? Or are we going to just ignore because there is no return on investment? Why? Because the cumulative profits or sharing the profits is 120, while the cumulative dividends received is only 88. Now, if you try to read PAS number 27, ang sinabi niya dito ay, where is that? The investor recognizes income from the investment only to the extent that the investor receives distributions from the accumulated profits, and the excess, no, or dividend distributions received in excess of such profits are regarded as a recovery of investment and are accounted for as a reduction of the cost of investment. Ayun, reduction in the cost of investment, like a return on capital. Now, when I asked someone, oh, so how are you going to interpret this? Sabi niya, well, because it uses this term, profits. It refers to the cumulative profits. Okay? Therefore, anong gagawin natin dito? There is no return on investment. Okay, there will only be a return on investment if the cumulative dividends received will be higher by the cumulative share in the profits. So that is your cost method. Now, under equity method, okay, if your investment will be accounted in this method, sabi niya, well, it will be used when the investor owns 20% or more. Ayan, meron siyang significant influence, and less than 50. Although in some books, okay, medyo nakakalito kasi, for example, dapat ba ako magkwento? For example, if your investment is, hindi naman zero, ayan, ganyan na lang. If your investment is 20% and below, okay, and below, you will be using cost method. And then, pag more than 50%, if it's more than 50%, you're going to use cost method na naman because for consolidation purposes. Now, between 20%, okay, and 50%, you're going to use equity. Ayan. Although in some books, sasabihin, well, at the option of the parent or the acquirer. Why at the option? Well, sasabihin, what if there is an interest of less than 50%, let's say 30 or 40, but there is full control of the decisions or in the operations of the subsidiary, then they can opt for full consolidation. They can also use the cost method. Okay? Now, in some books naman, okay, especially sa foreign, pero medyo luma na yata eh. Okay? If it's 20%, ayan. If it's 0 to 20%, cost method, and then if you want, sabi naman ng mga handbook, if you want to reflect the performance of your subsidiary in the books of the parent, you use the equity method. Okay, so medyo malabo. Anong susundan natin? Well, here in the Philippines, most of the problems found in the CPA board exams, okay, uses the cost method, in accounting for your subsidiary. And in accounting for associates, we use the equity method if the problem is silent. Silent as to what? As to its control. Kasi dito, significant influence lang ang meron. Not like in above 50%, wherein you own majority, okay, of the subsidiary, you already have your control. Okay, so there's a difference between control and significant influence, Parang kanyan, parang yung driver, si Mr., nasa passenger seat si Mrs. Okay, so sasabihin ni Mrs., gusto ko dito sa kanan, gusto ko dito sa kaliwa, gusto ko ng biglang liko. Okay, the Mrs. has the significant influence, but who is driving the car, it is the husband. Meron siyang control. Okay, so you see the difference between significant influence and control. Anyway, let's just focus on what is this equity method. Under this method, there is an account which is investment in associate, wherein initially it's recorded at cost. And, ayan, ito yung special feature. It is increased or decreased to recognize the investors' share in the profit or loss of the investee after the date of acquisition. So, if we try to apply that, okay, if this is your T accounts and that's your investment in associates, so you have here your acquisition cost, okay, and then sabi niya, it will be increased or decreased to recognize the investor's share in the profit or loss Share in the profit or loss, okay, in other books is called the equity in subsidiary net income, or the parent share in subsidiary net income. And that is if there is net income. If there is loss, okay, dito naman natin ipopost yung loss. Okay, share in the loss. Okay, what else? Dividends received from an investee reduce the carrying amount of the investment. So, as compared to cost method, in the cost method, you debit cash and credit dividend income. Here, okay, you debit cash and then you credit investment in associate, okay, for the dividends. Okay po. So, ayun, adjustments to the carry amount of the investment may also be necessary for changes in the investee's equity that have not been recognized in the investee's profit or loss. Okay, so what are these? For example, such changes include those arising from revaluation of assets and liabilities. For example, the difference of the fair market value versus the book value. Of course, the difference will be amortized. So, pwede nating ilagay dito, amortization of the difference of fair market value and book value. Okay, so this is one of the reasons why the equity method is considered to be a better method because it's going to reflect the performance of the subsidiary in this account. What does that mean? If this account is increasing, okay, so after some time, lumaki siya, it means that the equity or the performance of the subsidiary is also increasing or improving. If after some time the balance decreased significantly, then it also shows, nire-reflect na, sabi niya, di ba? It shows that the performance of the subsidiary is not good or the equity is also decreasing. Okay, so ayan. Kaya nga lang, because of these complications, this is not favored. Okay, this is the reason why cost method is favored. No, because under cost method, it's so simple. You have your T accounts, you have your acquisition cost. Oh, di ba? You only have your dividend income to record. Dito, aside from investment in associates or investment in subsidiary, meron ka pang isang T accounts. That is now your equity or subsidiary net income, which is composed of this one. Okay. Anyway, however, regardless of the accounting method used, the consolidation of the financial statements of the parent and subsidiary should be based on the assumption that both these companies comprise a single entity. And ano pa? Eto, take note. Whether the investment account is accounted for under the cost method or equity method, take note, the result of the consolidation process must be the same. Okay, so whether there is a significant difference in the cost method or equity method, no, in the end, if there is proper consolidation of financial statements, you should arrive at the same consolidated financial statements. Okay, so another way to say that, basta if you use cost method or if you use equity method, kahit anong gamitin mo dyan, dapat pareho yung itsura ng consolidated financial statements natin. Okay po? Okay, so to summarize, as of this point, what are the differences in the cost and equity method? Number one, in accounting for your investments. Okay, under your cost method, let's write that down. Under your cost method, you have your investment in subsidiary, and initially you will have here your acquisition cost. That's it. Okay, from the date of acquisition up to basta ingana, diba? Unless there is a significant, not a significant, basta there is an excess of the dividend or cumulative dividend income over the cumulative share in the profits, then that's the time you will have a return on investment or liquidating dividend. Paano po tayo nagkakaroon nito? If your cumulative dividend income, okay, is greater than your cumulative wrong spelling, burahin nga natin, and then your cumulative share in the income. Okay, so na-discuss na natin kanina. And also under cost method, you are going to maintain dividend income, ayan, coming from the income declared by the subsidiary. Okay po, so that one will be credit. So this one will come from the subsidiary. Of course, we're going to multiply that by your controlling interest. What does that mean? If your subsidiary declared, let's say, 100,000 and the parent owns, let's say, 80%, so you multiply 100 by 80%, your dividend income will be 80,000. Okay, so ayun, that's for your cost method. Now, for your equity method, let's try to summarize that. Okay, in your equity method, you have here your investment account. Okay, so you have the investment in associates. Okay, initially, you will have your acquisition cost. This will be increased by the parent's share in the subsidiary's net income, or decreased by the parent's share in subsidiary's net loss. Okay, if there are dividends received, okay, that will be treated as a reduction. That's your dividend income right there, but you don't record that as credit to dividend income. Instead, credit to investment in associates. Also, if there are amortizations, ba't ko sinulat dito? Let me erase that. If there are amortizations of excess, that will also reduce your investment in associates. Okay, may shortcut yan actually. If you have this, actually dapat ganito yung the accounts mo. Investment in associates, you have here your acquisition cost, and then you have here your SNI. Just use SNI for the moment, no? And then you have here your dividend income, and then you will have a different account, equity on subsidiary net income. This represents the parent share, no, in the changes in the net assets of your subsidiary. So if there is a net income, this will increase, no? Parent share in subsidiaries net income, you have parent share in subsidiaries net loss. Okay, and then you will have, burahin ko na, baka malito kayo, burahin natin yan ng konti. There you go. Even this one, yan, parent share in subsidiaries net loss, and you will have here the amortization of excess. Okay, the excess of fair market value versus your, there you go, versus your book value. Now, because there is a difference in accounting in the okay, accounting for your subsidiary in the books of the parent, we expect that there will also be a difference in your elimination entries. Okay po? So, ayun. Anyway, so those are just the major differences of your cost versus equity method. But there are more, okay? Pero we are going to discuss them as they become relevant, okay? Under PAS 27, eto na nga, provides that when separate financial statements are prepared, investment in subsidiaries shall be accounted for at cost. Di ba mas maganda yung equity method? Ayan. Pero sumusunod lang tayo sa batas. Okay, and this statement right here is interpreted as accounted for using the cost method. Although there was one, no, mahilig mag-comment. Okay, sabi niya, no, this only means that it will be accounted based on its cost lang, ganun, initially. Okay, lahat naman at cost, historical cost, ganun. Pero doesn't mean na hindi ka pwedeng gumamit ng equity method. Now, for our discussion, we are going to focus on the cost method. And if relevant, okay, or if it will help, we are going to discuss the equity method. Okay, paano ba to? Let's have an example. Okay, so here sa inyo first year of combination, it starts in 2011. Sabi niya the parent company purchases all of the ordinary shares. So this one is wholly owned because all the shares was acquired, and then sabi pa niya acquired at book value. And again, we can assume that as of this point, the book value is equal to the fair market value. So there will be no goodwill. Okay, kulang yung assumption nito. Anyway, it was acquired for 500,000. Okay, and as of this point, the subsidiary has ordinary shares of 400 and accumulated profits of 100. Let's compute for the goodwill. 500 acquisition price less the net assets acquired, which is also 500. Goodwill is 0. Dali ng trabaho natin. Also, during the year, okay, the subsidiary reported a net income of 200 and dividends paid of 50. Okay, so what are the necessary journal entries, okay, found in the books of the parent? First, to record the acquisition that will be debit to your investment account and credit cash of 500. Wala nang question dyan, no? And then at the end of the year, because we are using the cost method, we are going to record the parent share in the dividends declared by the subsidiary. Since it is wholly owned, okay, we are going to record the entire dividends. Balik tayo. All of these dividends declared by the subsidiary will be the dividend income of the parent. Why? Ayun, this one is the answer. Akin lahat yan, sabi ni parent. So, debit to cash and credit to dividend income. Take note, these journal entries are found in the books of the parent. Okay po. Ayan. And the above journal entries will result to the following. Okay, so if you have the T accounts, no, ito yung magiging ending balance natin. 500 and 50,000 respectively for the investment account and for the dividend income. Okay. Now, guys, feel free to pause the video, make some notes, mag-screen capture kayo. Okay po. So, ayun. You don't have to follow the video na dire-diretso. You can rewind. Okay? Kaya nga ni-record ko siya para pwede po nating ulit-ulitin. Okay? Wag na kayong mahiyang ipaulit sa video. Hindi ko naman malalaman. Okay. So, let's continue. Consolidated Statements. Okay? Worksheet. Elimination entries will have the following. So, sabi niya, eliminate the parent's company equity, okay, at the date of acquisition and eliminate the dividend income. Paano yun? Okay, madali lang. At the date of acquisition, this is the book value, which is equal to fair market value. Book value of net assets acquired. So, you simply debit that and then credit investment in subsidiary. Okay, so wala na. Okay, why is this called elimination entry? Take note, these are found on the credit side. Okay, in the books of the subsidiary. Let me write that down. In the books of the subsidiary, they are found on the credit side since they are debited. Wala na po ito. Okay, and what about this? This one is found on the debit side, but this time it's in the books of the parent. Sir, how do we do that? Okay, this account is found in the books of the subsidiary and this one is found in the books of the parent. Take note, these entries are only made in your elimination working paper, not in the books of the parent and not in the books of the subsidiary. Okay, aside from that, we are also going to eliminate this dividend income against the dividends declared of the subsidiary. Why? You cannot record an income coming from yourself. Tama ba? It doesn't make sense. No, because you have the parent and subsidiary reporting as one entity, and before they are going to report or prepare consolidated financial statements, di ba may dineclare na dividend si subsidiary, and it was recorded as an income of the parent. Now, as one entity, you cannot do that, no? Na pinagkakitaan mo yung sarili mo. That's why we are going to eliminate this. Okay po? This one is found in the books of the parent, while this one is found in the books of the subsidiary. So, after doing that, wala na po yung mga accounts na to. And tapos, you can now prepare your financial statements. Okay? So, since it's wholly owned, there will be no minority interest net income. Okay? And in your consolidated financial statements, okay, the parent's income from its own operation, okay, take note, the parent's income from its own operation will be, ano na to? Yan, will be consolidated. Where is that? Ito pala. Will be consolidated with the subsidiaries' income from its own operation. What do I mean income from its own operation? It will not include the dividend income. Okay, so parang tatanggalin mo lang yan and then you will add everything and you will get 700. Why 700? Because this 550 includes this 50. And by making the elimination entry, okay, nawala na to, minus 50,000. So you will now have 500 plus 200. Okay po? So that's it. What about your accumulated profits? Okay. Asan na siya? Ayun. Your accumulated profits will be 2,640,000. Okay. So how do you compute for your accumulated profits ba? Now let me see. Meron ba tayong shortcut dito? Wala. Sige, let's just use this space. Okay. In your consolidated, if you are asked to compute for your consolidated retained earnings, may gray area dito, pero ito muna, sundan ninyo ha. It will be composed of the parent's retained earnings plus your consolidated net income, okay, minus the dividends declared by the parent. The ending balance will now be your consolidated retained earnings. Okay, so as of this point, what is the beginning retained earnings of the parent? Okay, it's 2 million. Let's see, is it here? Okay, so the parent has a beginning retained earnings of 2 million. So ilagay natin dito. Let's try to compute that. Correct na lang natin mamaya pag nagkamali ako. Ganun lang naman eh. Okay, and then, what is your consolidated net income? How do you compute that? In this case, nawala po tayong amortization, no? One of the things that I normally do para madali, okay, I have here my CNI as far as the parent is concerned. I have here my NICNIS, non-controlling interest in the net income of my subsidiary. Okay, and then I have here the total. Okay, one of the elements of the, let's not use total. Ang gawin na lang natin dito ay consolidated net income, the one that will be reported in the income statement. Okay, so let's start with the parent's net income from its own operation, which is in this case 500,000. Sir, bakit 500? 550 kanina eh. Yes, 550, but that is not from its own operation. Remember, 50,000 came from the dividend income. Okay? Walang share ang minority interest sa parents' net income. Lahat ito pupunta sa consolidated net income. Okay, next. What about the subsidiaries net income? In this case, the subsidiary reported a net income of 200,000. Okay, so out of this 200,000, how much is the share of the parent? Okay, 200,000. Why? Because it's wholly owned. Walang makukuha ang NCI, NIS. So this one will be 200,000. Okay po. Tapos, wait lang. Nasaan na yung aking... Bakit nawawala siya dito? Anyway, let's continue. So, from there, this is now the parent's net income. Sana may amortization pa, di ba? So, your total now will be 700. Ito ngayon ay, hindi ko mahanap yung calculator ko. Okay, so this one will be 700. mali. Okay. Ayun. 700,000. How much is the dividends declared by the parent? Let's see. The parent declared dividends amounting to, where is that? Dapat nandito lang yun. Okay, the parent declared dividends amounting to, I'm almost there. Tulungan nyo ako. Ayun, the dividends declared by the parent is 60. So, less 60,000. So, 2 million plus 700 less 60. This will be 2,640,000. So, that's now your consolidated retained earnings. Okay, if you're using the cost method or equity method, you should arrive at 2,640,000. So, where is that? Ayun, doon po nanggaling. Yung 2,640,000. Okay po? Alright. So, let's continue. Consolidated Statements, Worksheet Relationship. Okay, some notes, no, for you to remember. Ayan. Elimination 1 deals with the elimination of the intercompany investment, that's the investment account, and the subsidiaries equity account at the date of acquisition. This one, sabi niya, at the beginning of the period. O, pwede rin naman. Okay? And then, the consolidated net income and consolidated accumulated profits in the working paper may be verified as follows. So, let's see. Now, let me explain this. Sir, bakit kanina 500 ang ginamit mo? Yes. This one actually includes the dividend income. That's why in this approach, the dividend income was deducted against 550. Now, sa akin, para shortcut lang, tinatanggal ko na kaagad yan para gagamitin ko na lang yung 500. And you will get 700. Sa ngayon, siguro it doesn't make any significant difference, but when there are a lot of adjustments, like adjustments for your amortization of excess, okay, and then you have your non-controlling interest, and then you have a constructive problem, sometimes it helps kapag diretsong income from own operation na lang. Okay, so that's your consolidated net income. And your consolidated profits, ito yun, parang T accounts lang, you will get 2,640,000. Okay po. So, ayun. Next, let's see. From the illustration above, it is to be noted that the consolidated net income is the result of all revenues and expenses of the individual consolidating companies arising from transaction with only non-affiliated companies. Okay, or with third persons lang. Sabi niya, the net income is the part of the total income of the enterprise that is assigned to the shareholders of the parent. Okay. What about the minority interest? Well, it's wholly owned, kaya walang may assign sa kanila. The consolidated accumulated profits, on the other hand, is the portion of the undistributed earnings of the consolidated enterprise accruing to the shareholders of the parent company. Now, you have to take note of this because there are other approaches wherein the consolidated earnings includes the consolidated earnings of the parent plus the consolidated earnings of the subsidiary. That part medyo gray area yan. But if you try to solve board exam problems, okay, the parents reported consolidated retained earnings pala, yun sa parent lang. It does not include the consolidated, it does not include the retained earnings pertaining to the non-controlling interest. Okay, why? Because the non-controlling interest is a separate item in the stockholders' equity section. Ngayon, medyo malabo pa, but I'm going to show it to you later. Okay, so that's for the first year. What about on the second year? The consolidation procedures to be used at the end of the second year and in the periods thereafter are basically the same. Okay? Consolidation 2 years after the combination is illustrated by continuing the example. So, in this example, the subsidiary now reports a net income of 225,000 and dividends of 60. Okay, you take that down para babalik-balikan natin. 225 and 60,000, okay, from the subsidiary. What are the journal entries found in the books of the parent? Since we are using the cost method, very easy. Okay, it's simply a debit to cash and a credit to dividend income. Okay, so after that, at the end of the year, you have the following balance, okay, 500 and the dividend income of 60. Okay po. Now, what if, no, may nag-message sa akin, sir, most of the books are using cost method. Now, what if can you show us an example wherein, okay, we are going to compute for the investment balance if the company is using the equity method. Okay, so before we go to the elimination entries, let's try to compute for the investment balance if the company is using the equity method. Okay, so let's start. Okay, in year 1, this company was acquired at how much? 500,000 pesos. Okay? Also, in year 1, the subsidiary declared a net income amounting to 200 pesos. Okay? And since this is wholly owned, okay, the parent's share in the subsidiary's net income, 100%, okay, will increase the investment account. Okay. Also, in year 1, the subsidiary declared dividends of 50,000, okay, which is recorded as dividend income. So, that dividend will reduce our investment. Okay, nakita nyo? Okay. Therefore, the ending balance now will be 500 plus 200. That will be 700 minus 50. The ending balance will be 650,000 pesos. That's for year 1. What if, okay, dito tayo sa year 2. Tingnan nyo to, at year 2, under cost method, it's still 500. Year 2, using the equity method, the beginning balance is now 650,000 pesos. Okay? Also, okay, the parents share in the subsidiary's net income, 100% owned. Right? So, we are going to, how much is the net income? 225. Okay, that will be 225,000 pesos. Dagdag natin yan. And then, the dividends declared will be posted on the credit side. 60,000 pesos. So, what is now the ending balance? Okay, so let's try to compute. Okay, so you have 650, 1, 2, 3, okay, plus the net income, 225, 1, 2, 3, okay, oops, so sorry, and 225,000 minus the dividends, which is 60,000. Ta-da! And the ending balance is 800. Come on. 815. Oh, diba? If you are using the equity method, okay, you don't have to consolidate. You don't even have to look at the financial statements of the subsidiary. Okay, you just look at your investment account. It was previously recorded at 500, but now it's 815. Okay, so this is an indicator that the subsidiary acquired is performing well. Okay po? Now, let's continue. Oh, wait lang. May nag-question din pala. Sir, what will be the elimination entry using the equity method? Okay, in year 1, first you're going to eliminate this. No, debit to dividend, no, not dividend income. debit to dividends declared, okay, and then credit to your investment in subsidiary. Okay, basta credit mo yung investment in subsidiary para mawala yan. Okay? And then, aside from that, you are going to debit, wait lang, asa na? Eto, okay? You are going to, since it was debited, no, the journal entry to record this kasi in the books of the parent is debit to investment income 200,000 and credit equity in subsidiary net income. So you're just going to reverse that. Debit in equity in subsidiary net income and credit investment in subsidiary. So na-eliminate mo na rin yan. And finally, you eliminate this by debiting the ordinary shares and share premium of the subsidiary and credit the investment account. In short, you eliminate this, and then you eliminate this part para maging 0 po siya. Okay? So, ayun. For year 1 and year 2. Anyway, let's go back to our cost method. Okay, this will be your elimination entries. Sir, bakit 650? Di ba kanina 400 lang yan? 400, this one is 100 and then credit to 500. Why are we now eliminating 650? Take note, in the books of the subsidiary, okay, although it was previously 100, but after a year, diba, may income siya na 200,000 and there was 50,000 declared as dividend. So 200 minus 50, that's 150. So the accumulated profits will increase. We'll have a net increase of 150. And look at this, 650. If we are using the equity method, it's easier to understand. Okay, this will be your elimination entry to eliminate the beginning balance of your investment. For cost method, hindi dapat ganyan. There should be a different journal entry. Why? Because in cost method, the investment account is only 500, right? So there should be a credit of 150, no? This one should be 100. This one should be 100,000. This one should be still 500,000. But you will have a credit to accumulated profits of parent at 150. And this one will be accumulated profits, okay, of the subsidiary. So that's another alternative. Pero pwede pa rin naman ito. Wait lang, i-indent lang natin. So, para hindi kayo malito, 400, 250, and 650. 250 for the accumulated profits of the subsidiary as of the beginning of the year. Okay po? Beginning of the second year, which is the end for the first year. Huwag kayong malilito. Dividend income, that is okay, standard na yan. And then this one, okay, bakit siya investment in subsidiary? O di ba nakakalito? Under this approach, you credited 650 and then you're going to debit 150 again para lang maging 0 yung balance niya. Okay, ayan. And then credit to 150. May alternative dito, yung sinasabi ko kanina. First, let's remove what is easy, no? Debit to dividend. Let's start with the dividends na lang. Debit to dividend income and credit to your dividends declared. Pareho lang yan. In this case, it's 60. I said 60. Ayaw sumunod ng kamay ko. 60,000 pesos. Okay, so there you go. Next, okay, dito tayo. Let's try to make some adjustments, okay? Let's use this, okay? Debit to accumulated profits, okay? Accumulated profits of the subsidiary amounting to 150. And credit to accumulated profits. Let me explain bakit ganito accumulated profits. Dapat kasi retained earnings na lang eh. Of the parent na 150. So, why are you doing this? Okay, this one is to restore the accumulated profits back to its original balance, which is 100,000. Diba? Now, it's 250. Dati, when it was acquired, it's 100,000 and then it was increased by 200,000 because of the net income and decreased by 50,000 because of the dividends declared. So, now you have 250. By doing this approach, okay, you are now eliminating this, no, and restoring it to 100,000. Sir, what about this? Okay, why are you crediting accumulated profits in the books of the parent? Because, okay, if they have been using equity method, sana, the investment, okay, should have increased 150, no? Umakyat sana yan by 200,000, okay, and bumaba dapat yan ng 50,000. And this one should go to the net income of the parent. But because they're using the cost method, hindi po ito pumasok. Okay? It was not included in the parent's net income last year. Okay, that's why we are including it now. This is the parent's share in the net increase in the subsidiaries' accumulated profits. Now, if you're using the book of Dayag, I think he's using that account title. Ang haba. Parents share in the net increase in the subsidiaries' accumulated profits. Or increase in the net assets, something like that. Anyway, okay, so for this year, we have eliminated the effects of the net income. We have restored your accumulated profits of the subsidiary and can recognize the profits which were not recognized last year. Now we are left with one very easy elimination entry. Debit to ordinary shares. Okay. Debit to, are we using share premium? Accumulated profits pala. Debit to accumulated profits, okay, which is, this one is 400,000. And look, 100,000 na lang. Ang daling intindihin, di ba? Because at the time of acquisition, this is actually the cost of your investment in subsidiary, which is 500,000. Okay, so this one is a better approach because if you, now I'm not saying that this approach is wrong, it's just that it's misleading because sometimes it appears na nagfo-force balance ka lang. Diba? Why are you using 650 saka mo ibabalance yung 150? Okay, parang ganun yung effect niya pero actually tama rin naman yan. Okay, here mas malinaw because the cost is 500, you eliminate 500. Okay, so that's the alternative approach. Now, let's continue. This is now your comprehensive income statement. Now, if you notice, this one is eliminated. So, wala na po yan sa income ng parent. Okay, so the income now is just 500. No, it's not just 510. This is the reported net income. If the problem is asking you how much is the income from its own operation, you have to remove 60,000 muna. So 560 minus 60. The net income from its own operation is 450. There you go, 450,000 pesos. Plus the share in the parents, in the subsidiaries net income. In this case, it's wholly owned. Di andali na lang. Tara! Okay, 450 plus 225, you will now have 675. Okay, so you have your C and I as far as the parent is concerned. Non-controlling interest, okay, the net income of the subsidiary, which in this case it will be 0, and then you have your consolidated net income, okay, for the combined entity. You have the parent's net income from its own operation, which is how much? Siya yun, 450. 0, 450. And you have the parent's share, okay, in the subsidiaries net income. In this case, it will be 225. This one will be 0. And this one will be 225. Ako, inaantok na ako. Kaya na ako nagkakamali. Ayun. Okay, for a total of 675. How much is the reported consolidated net income? 675. How much is the consolidated net income? As far as the parent is concerned, it's 675. Okay po. So, ayun. If we are going to compute for the consolidated retained earnings, di basic lang tayo. Let's use your T accounts. Okay, what's the beginning? It's 2,640. Now, if you try to look at this, in the books of the parent, it's 2,490. Another thing that you have to remember, if the parent is using the equity method, the parent's reported net income will always be equal to the consolidated net income. And the parent's retained earnings will be the consolidated retained earnings. In this case, it's cost method, kaya magkaiba siya. Okay po? So, let's use 640 plus your consolidated net income, which is 675. Okay. Ayan. Or this one. And then, less the dividends declared by the parent. Maghahanap na naman tayo ng dividends declared, which is 90. Let's see nga. Where is our calculator? So, you will have 2,640,000. 1, 2, 3. Sumobra siya. Plus, ayan, 675, 1, 2, 3. Alright. Minus the dividends declared, which is 90. And you will have 2,225,000. Ayun. Siya po siya. That's the ending balance, 3,225,000. Okay, 1,000 pesos. And this is your statement of financial position. Okay, wala rin siyang goodwill. There you go. Alam niyo na kung saan nanggaling yan. Okay, so let's continue. What if? Okay, let's talk about acquisitions, okay, that are partially owned. So dito magkakaroon na tayo ng NCNAS, also known as minority interest. Okay, pag nakita mo yung NCNIS, non-controlling interest in the net income of the subsidiary, in some books, we just call this minority interest net income. Most of the time, I'm using these two kasi mas tipid siya sa letters. Tamad ang instructor nyo eh. Anyway, on the first year of acquisition, what happened? Okay, the parent only acquired 80%. For how much? For 400,000 pesos. Okay, so given those figures, we can assume that the subsidiary's worth is 500. Because if the parent is willing to pay 400,000 for 80%, then the subsidiary may have an implied value of 500,000. Okay, so we're going to assume that. That's why as of this point, the non-controlling interest in the net assets of the subsidiary or your minority interest is now 100,000. It's 20% of 500. Computation of the difference. Okay, so ayan, you add the two. Okay, fair value or book value. Oo nga pala. Okay, let's go back to the previous slide. Kulang yung assumption niya. This one, we assume that the book value is equal to the fair market value. Ayan, so it was acquired at fair market value. There will be no difference. Okay? So, ayun. Now, another way to show that, okay, if you have here the parent, and then you have the minority interest. Total, okay, so you have the acquisition cost. The parent paid 400,000. The fair market value of your minority interest is 100,000. You have a total of 500,000. Less the book value sana, pero since book value is the same with the fair market value, which is 500,000, shortcut, di ba? Acquisition cost less fair market value equals goodwill. No difference, zero din yan. And this one is 400, that's 80% of 500. This one is 100, that is 20% of 500. So no goodwill attributed to the parent and to the minority interest. Okay, so this will be the parent's journal entry in its books, okay, using the cost method. First, to record the acquisition, debit to investment at 400 and credit cash. And then, when the dividends are received, you debit cash and credit dividend income. Amounting to 40% or 40,000 kasi, bakit? The subsidiary declared, from the previous example pala, so pareho lang. If you remember, the subsidiary declared 50,000 for year 1 times 80%. Yun lang yung share ni parent. So, you now have 40,000. So, ito ba yung 500,000 times 80%? No, this is the acquisition cost paid by the parent. Okay po. Now, let's continue. So, how are we going to eliminate those? First, you eliminate the book values, okay, of the subsidiary. Since 100% elimination yan, tatanggalin natin lahat. And what is this 400? Okay, common error. Sir, ito ba yun? Is the ordinary share this one, and 100 accumulated profits is the minority interest? Hindi. This one is 500,000 times 80%. It's actually the total of these two. There you go. And this one is 500,000 times 20%. Okay. Next, what about the dividends? Okay, we're going to remove the dividends declared by the subsidiary. Dati, 40 lang ito. But if you want to show that, okay, and consider the effect in your minority interest, okay, you're going to make this entry. This one is to eliminate the dividend income by the parent, and this one is to reduce your minority interest by 10. Okay? Kasi ganito yan. No? Tutukan nyo to. Malaking bagay to. Okay? Because this is one of the common questions. How much is the minority interest that will be shown in your financial statements or consolidated financial statements? Here you have the beginning balance. Okay, what is the beginning balance? Ito yun, 100,000. Now, this one should be stated at its fair market value. Tatandaan nyo na. Okay. Sir, di ba book value yan? Yes, but it's also equal to its fair market value based on this example. Next, you add the minority interest net income, also known as NCNIS, non-controlling interest in the net income of your subsidiary. Okay, nahahanapin natin mamaya. Okay. And then, you deduct here the dividends, no? Dividends declared. In this case, the dividends declared, okay, pertaining to the minority interest is 10,000. Okay, now, eto na lang ang kulang natin. Okay? Your subsidiary declared, okay, ay wait, ano to? Non-controlling interest in the net income, eto na pala yun. Ayan, 40. And then you have your non-controlling interest in the net assets, which is 40. Saan po nanggaling ito? Okay, in the first year of operation, your subsidiary, ayun, nandito pala. Buti hindi ko na sinulat. Your subsidiary declared, has 200,000 as a result of its operation. Now, it's partially owned. We only own 80% of that. So 20% will go to your minority interest, and that will be 40. So let's write that down. So if you were asked, how much is the ending balance of your minority interest in your consolidated financial statements? That will be 100 plus 40 minus 10. The ending balance will be 130,000 pesos. Okay. Now, let's continue. Elimination entry, these are just the notes, no? It eliminates the investment account balance. Kaya the date of acquisition. Number 2, it eliminates the dividends. Okay, and then you have the entry to record the share of the non-controlling interest, okay, in the net income of the subsidiary. Okay, by doing these journal entries, you have computed, no, and established the balance of your minority interest or your NCNIs. There you go. Okay, as usual, the dividend income of the parent which came from the subsidiary will be eliminated. Bakit? Kunyari, may sumagot. Okay, so that's correct. Okay, because you cannot report, no, you cannot report an earning coming from yourself, okay, as one reported entity. Ayan, dahil pinag-isa sila, hindi ka pwedeng kumita sa sarili mo, diba? So, tanggalin natin yan. Also, okay, because of this entry, you were able to, come up with the net income in your subsidiary, which is, wait lang, bakit 10,000? Balikan natin. Okay, ayun. Net assets pala dapat yan. Deduction. Okay. Ayan. And then, you also have the following adjustments in your accumulated profits. Tatanggalin natin yan. Also, you have the dividends declared by the subsidiary, which is 50. Ayan. Sir, what if the question is, how much is the consolidated net income? Punta tayo dito. Okay. Para mas maintindihan pa natin ito. Okay. So, how much is the reported net income of the subsidiary? It's 200,000. The parent's share is 80%. That's 160. And the minority interest is 40. Okay, that will be 20%. So if you're going to compute, okay, you have here the consolidated net income as far as the parent is concerned. You have your minority interest net income or your NCNIs, and then you have here your consolidated net income total. Tignan nga natin. For the parent's net income from its own operation, it's supposed to be 540. Pero minus 40, 500 na lang. Sulat natin, 500. May share ba si minority interest? Wala, no? So, lahat yan pupunta dito, 500,000. Next, subsidiary net income. Okay. The total will go to your consolidated net income. So, here, the share of the parent is how much? Times 80%, you will have 160. And the minority interest will have 40 and 40,000. So your total now, your total consolidated net income is 660. Ito 700. Ayan. Ano tong 40,000 na to? Yan yung dinideduct natin. Kaya ito dapat 40,000 yan. Ayun, kaya pala ako nalito eh. Anyway, ayan, let's continue. So, how much is the consolidated net income? Okay, for the entity, it's 700,000 less the share of the minority interest, okay, which is 40,000. Okay, you will now have the reported consolidated net income as far as the parent is concerned, okay, or equity of the parent in the net income. Okay, in this author, ang ginagamit niya ay equity holding of the parent dash net income. Pare-pareho lang naman yun. Okay, 660. If you're using the equity method, this is your consolidated net income. Ayan. Now, if you are asked to compute for your consolidated retained earnings, okay, ito yung gagamitin natin, yung 660 na yan. How much is our consolidated retained earnings? Okay, starting with the beginning balance, okay, of the parent na 200 plus 260. I-accounts mo lang, imaginein mo na lang, less 60, the one declared by the parent. Okay, and you will get 26 as the consolidated retained earnings or consolidated accumulated profits. Okay. Wait lang. Okay. In some books, the consolidated retained earnings is computed by the consolidated retained earnings, okay, or the retained earnings from the parent plus the retained earnings from the subsidiary. Medyo nakakalito. Okay, this one will be the retained earnings of the parent as far as the parent is concerned pala. Okay, which is 26. And then, okay, if you remember the subsidiaries retained earnings, which is 100, okay, 100 na yan, 100,000 times 20%. So you will now have 20,000. Okay, their answer is 2,620,000. Again, this one is questionable because this cannot be your consolidated retained earnings. Why? Because in your consolidated balance sheet, no, okay, you have a separate account title which is your NCNAS, non-controlling interest in the net assets of the subsidiary, which is composed of your ordinary shares, share premium kung meron, and the retained earnings pertaining to your minority interest. Which means this one, this 20,000 belongs here. Kaya hindi dapat kasama yung 20,000 yan if you're computing for your consolidated retained earnings. Anyway, I'll explain more, okay, as we go along. Okay. So, ayan, how much should be your consolidated retained earnings? Ito lang po siya, 2,600,000. Okay, and then you have a separate account title which is your non-controlling interest in the net assets of the subsidiary. Okay, so how much is the non-controlling interest, no, in your subsidiary? Okay, let's try to compute nga. Or na-compute na yata kanina. So, yeah, the minority interest is this the one? Ayan, 40, ending balance of 130. Now, where is your 130? Kasi i-deduct natin yan from the total equity of the parent. Ayun, from the total equity of the parent, okay, minus no, hindi pala bawas, dagdag, plus 130, you will now have your total equity. Ayun. Okay. Iba pala yung binabawas. Ang ibinabawas ay yung minority interest in net income. Ulit. Let's go back. Okay, alam ko litong-lito na kayo. Ako rin, nalilito. For example, how much is your consolidated net income? It's 700,000. How will that be presented? Total na consolidated net income, 700,000. How much is the parent's equity, no, in the consolidated net income? Less minority interest net income, which is 40. The answer will be 660. So this one will be deducted from 700. But the minority interest, your NCNAS, should be added. Ayan, which is 130. Previously computed like this. If you remember, 100 plus 40 minus 10 equals 130. Okay, forward ko ulit. And there you go. Ayan, nandito rin lang naman pala. Okay, this is another way to compute, no? You get the subsidiaries net assets, okay, initially at 500 plus, diba, the net increase last year, okay, which is, this year pala, which is 150 times 20%. So you still get 120. No, 130. These are the financial statements. We are almost done. Okay. Some highlights. Consolidated net income is computed as, di ba? 660 plus 40 equals 700. Sometimes it's 700 minus 40, 660. Pare-pareho lang yung approach na yan. You have here your equity holders of parents accumulated profits. Okay, P accounts lang. And you have the accumulated profits at the end of the year. Okay, so dito ibinawas naman niya yung 50. Okay, pertaining to the non-controlling. No, hindi siya binawas. Idinagdag niya. Ayan, because this is a separate item in the stockholders' equity. Dapat. Ito, sundan nyo na lang ito. Ayun, separate item in the stockholders' equity. So, idinagdag siya doon. Ako, ang liit. Grabe. Dito sa desktop, hindi ko na mabasa. Lalo na siguro sa mga cellphones ninyo, di ba? So, gawin nyo na lang, i-pause, tapos zoom in, zoom in. Ayan, take down notes, no? Feel free to take down notes. Ngayon, kung ang ginagawa nyo lang, pinapanood nyo lang, naku, baka medyo mahirapan tayo dito. Okay? Konting effort lang. Mas naiintindihan natin yung lesson kapag active yung utak, may ginagawa siya. Okay? Kasi kapag passive lang, pinapakinggan lang, nandyan na yung notes, malinaw lahat, naku, baka hindi tayo matuto kasi hindi naging active yung utak. Okay. Now, let's continue. Bilisan natin some highlights. Okay, carrying amounts of the parent's investment and its portion of equity in each subsidiary are eliminated according to PFRS number 3. Intercompany accounts are eliminated. In the process of elimination, you have established the non-controlling interest in the net assets, which is shown in the consolidated balance sheet. Also, in the process, you were able to establish the NCNIS, no? The share of the minority interest in the income of the subsidiary. Okay, so ayun. Now, in the consolidated profits, they are adjusted for the subsidiaries' cumulative preferred dividends kung meron, whether or not dividends have been declared. Pero in this case, wala po tayo preferred dividends. Okay? In the event, eto masaya, in the event that losses applicable to the minority in a consolidated subsidiary would exceed the non-controlling interest in the equity of the subsidiary, the excess, and any further losses incurred by the non-controlling interest is to be charged against the majority interest. Okay, so ano kaya itong losses na sinasabi na to? Anyway, pag meron yan, i-discuss natin. Baka ma-overwhelm kayo. Okay. Although as of this point, I want to emphasize na pag may nagtanong, kasi normal na question is, sir, ibig bang sabihin nito, hindi pwedeng magkaroon ng share yung minority interest doon sa losses? Pwede naman. Pwede siyang magkaroon ng share sa losses. Okay? Pero if, yun lang, yung share niya sa losses will exceed the non-controlling interest in the equity of the subsidiary. Anong ibig sabihin nito? For example, your minority interest, no, is 100,000, and then the share in the loss in the subsidiary, okay, is only 20,000 lang naman. Okay lang yan. Okay, so 100,000 minus 20,000. But if, for example, your minority interest is 100, and then you have a net loss of, let's say, 500,000, no? 500,000 wherein 25% of that is for the minority interest. Imagine loss of 500,000 times 25% minority interest, that's already 125,000 na loss. Patay. This one is only 100. Yun yung sinasabi nito. Okay? Yun yung the excess and any further losses incurred by the non-controlling interest is to be charged against the majority interest. So the excess only, which is in this case 25,000, will be charged against the majority interest. This will be as a deduction in your retained earnings. Okay, maraming nalilito dito. Kasi if that's the case, sasabihin, no, the entire 125,000 will be charged against the retained earnings of the parent. Hindi. Only the excess of the share in the loss. Okay. Ayan. This one is 100 positive. This is negative 125. You will just charge 25,000. Consolidation of a partially owned subsidiary acquired other than book values. Okay, so you still have the same transactions, same journal entries, except that this time we are going to consider the difference of the fair market value and book value and amortization of the difference. Balikan nyo na lang to. Hindi nyo rin lang maiintindihan pag i-discuss ko siya na ganyan. So, punta na tayo sa application muna. Saka natin balikan. Here, in the first year of operation, the parent company purchased 80%, okay, for 500, and then there is a difference in some of the assets of the subsidiary. Okay, you have here the book values and fair values. So, your inventory is understated. No, it's understated by 5,000, and your property, plant, and equipment is also understated by 60,000. Now, when we say understated, mas malaki yung fair value kesa sa book value. Ano ngayon? Diba? Siyempre, number one, you have to revalue inventory and equipment at fair market values. That's our rule in business combination, because if these are acquired from 80, dapat maging 85 yan. From 620, dapat maging 680 yan. Aside from that, ano yung amortization na sinasabi? Ganito kasi yan eh. This one, 620 versus 680, there is a difference of 60. This means that if the equipment is undervalued by 60,000, the depreciation expense is also undervalued. So this one should be amortized based on the remaining life of the property, plant, and equipment. Sir, what about this? This one, we don't amortize this, na divide that by the life of inventory. Instead, we're going to recognize this on the period when they are sold. So, assuming, gaya nyo, mga assuming kayo, assuming, okay, that this inventory will be sold during the current year, this means that your cost of sales is understated by 5,000. Therefore, you're going to adjust your cost of sales by 5,000. Yun yung sinasabi niyang amortization of excess or allocation of the amortization of excess. Let's continue. Tara, consideration received, 500, and the fair market value of the non-controlling interest at fair value. This is under the assumption that we are using the full goodwill. So, paano po siya na-compute? If the parent is willing to pay 500,000 for 80%, so we simply divide this by 80% and you will get 625,000. And what is 20% of 625,000? You get 125,000. Okay, so another way to show the computation of goodwill will be, diba, yung ginagawa natin, huwag kayong magsasawa. So you have here yung sa parent for the subsidiary or minority interest, and then you have here your total. Okay, acquisition cost, the parent paid 500,000. Okay, and the minority interest, okay, has a fair market value of 125,000, a total of 625. The implied value of the subsidiary, less the book values of the net assets acquired. What's the book value of net assets acquired? 500. Long cut kasi book value. Pwede namang fair market value. Pakita natin mamaya. So you have here 125,000. Sir, is this the same with this one? No. Nagkataon lang. And that's why I'm doing this approach, para makita nyo. Nagkataon lang na pareho yung minority interest and the difference of the acquisition cost and the book value. Anyway, you have here the difference, no? 500 times 80, that's 400. 500 times 20, that's 100,000. The difference now is 100,000, and this one will be 25,000. Now, what about the allocation of excess? You have a total of 65. So, we remove 65,000. 125 minus 65,000, this is 60,000. That's now your total goodwill. Okay, share of the minority interest in the 65,000. Naku, di na kaya ng powers ko. 65 times 25, 65, 1, 2, 3. No, 65 times 20% lang pala, times 20%. Okay, so you have 13,000. Okay, 25 minus 13, this one will be minus yun Ayan, this one will be 12,000. Okay, 12,000. And what about this? Nalagyan natin dito, allocation. Okay, what is now 80% of 65? Let's compute 65 times 0.8. 52. Okay, so 52,000 dito. Ayan. 100 minus 52, you now have 48,000. That's, if we are using partial goodwill, this will be 48,000. Okay, but pag total goodwill, the answer will be 60,000, and we're going to record that later. Okay, so first things first. Okay, if these are the results of operation of the subsidiary, 250, kabisado na natin yan. What will be the entries found in the books of the parent to record the acquisition? That will be 500, and patay. Ito, pakitaas na lang dito, 500,000. And for the dividends received, ay bakit 40 lang? Kasi 80% lang. Oops, sorry. 80% lang yung na-acquire. So you have 80% times 50,000 na ayun, na dividends. Sinulat ko pa nandun. Sorry, I got carried away. Okay, so as of this point in the books of the parent, you have a balance of the subsidiary, investment in subsidiary na 500, and you have dividend income of 40,000 pesos. Okay, let's continue. Amortization of allocation of difference. Ito na yung sinasabi ko sa inyo kanina. Okay, how much will be the amortization for the inventory? Assuming that the inventory was sold in 2011, okay, you're not going to amortize that. You're going to recognize the entire difference for 2011. What about this 60,000? Under the assumption that the life of the equipment is 10 years, 60,000 divided by 10, you get 6,000 every year in your amortization. Goodwill is not amortized but subject to impairment. So, wala po tayong amortization dyan. Let's go to your elimination entries. First set of entry to eliminate the book values of the net assets acquired, 80% of this pertaining to your investment and 20% of this pertaining to your minority interest or non-controlling interest. Next, entry to adjust the net assets acquired into their fair market values and to record the goodwill. Since we are using full goodwill, may share po dito ang subsidiary. Okay? So, saan po nanggaling itong 100,000 na to? Saan nanggaling yan? Kaya po tayo pumunta dito. Kaya natin ginawa ito eh. Ayan. This is your 100,000 and 25,000. Sir, bakit? Hindi ba yan yung difference? Niloloko mo naman kami. Ganito kasi yan. Saan pa, para saan ba itong 100,000 na to na difference? 52,000 for the allocation and 48,000 for the goodwill. Okay, what's this 52,000? This is actually 80% of 65 and 48 is 80% of 60. Nagets? Ito naman, yung para po sa minority interest. 13 plus 12 is 25. Okay, so let's continue. Sir, saan po nanggaling ito? Okay, take note, this entry has something to do with the revaluation. Okay, so this one is 65. 65 times 80%, that will be 52. 52. 65 times 20%, that will be 13,000. Okay, na-revalue na natin. Next, you record the goodwill. What is 80% of 60? That will be 48. 20% of 60, that will be 12,000. Now you have 25,000 and 100,000. Okay po. Now let's continue. Other elimination entries. Sir, ano na naman yan? This is for the amortization. We debit cost of sales of 5,000. Why? Because inventories were understated. So, cost of sales will also be understated. So, to adjust that, we debit cost of sales by 5,000. What about this? Okay, since your equipment is understated, depreciation expenses is also understated. Okay, and to adjust that, we debit depreciation expense of 6,000. And this is an amortization of the excess. Anong excess yun? Ito. Okay, yung revaluation natin. Ito yung excess na pinag-uusapan natin. So, dahil nabenta ng inventory, wala na yan. Credit inventory of 5,000. Nasusundan po. What about this? Okay, this excess of 60,000 is not yet, tama ba, realized or recognized. Instead, only 6,000 will be deducted. Kaya 6,000 lang tatanggalin mo. Ayan. Kaya, next year, pag nag-revalue ka, hindi na plus 6,000, kundi plus 60 minus 6, magiging 54,000 na lang yan next year. Okay. Kung nalilito ka, pwede mo namang ulitin mula umpisa. Next, what about your dividends? This one is basic na to. Remove the dividends declared. 40, the dividend income reported by the parent, and 10,000, okay, to recognize that as a deduction, okay, to your non-controlling interest in the net assets of the subsidiary. Okay po. Alright, now let's continue. Okay. Ay, may question pala dati. Sir, eto, aren't we going to divide this into 80% and 20%? Okay, that is an alternative method. You can also do that, okay? But since, okay, the adjustment will be on the consolidated net income, okay, 100% naman yun, pwedeng i-100% mo na yan, and then in the end, you simply deduct the share of your minority interest. I'll show you a schedule later para mas maintindihan. Okay, so this is now your non-controlling interest. Is this really an elimination entry? No, it's just an entry to establish the non-controlling interest in the net assets. Okay, so paano ko ba to i-discuss sa inyo? What is this 11,000? Ito yun. 6 at 5 from elimination entry number 3. There's another way to understand this, no? This 37,800. Saan ba ako pwedeng mag-compute? Dito na lang. Let's try to erase this. Let's compute for your consolidated net income, yung total consolidated net income as far as the parent is concerned, and your NCNIS or minority interest net income. You have here the parent reported net income. As of this point, hindi ko pa alam. Pero yung subsidiary has a reported net income of 200,000. 80% of that is 160 and 20% of that will be 40. Okay. O di tapos na sana, pero meron tayong allocation of excess. Okay, magkano po ba yung total na allocation natin? Ay, allocation of excess. Amortization. Yun na yung bago ngayon. Okay. Okay, so meron tayong amortization. Lilinya ko lang. Magkano ba yung amortization natin dito? It's 11,000. What is 20% of 11,000? That one will be 2,200. Okay. And 80% will be 8,800. Okay. I-deduct natin yan dito. Okay. So, wala na ibang adjustment. Sana may deferred gross profit pa sana or realized gross profit. Pero wala na eh. Walang ka-challenge. Okay. Magkano minority interest mo? 40 minus yung share niya sa allocation, ay amortization na 2,200, 37,800. That's your, ayan. If you add this to, this is your equity on subsidiary net income. If you're using equity method. Okay, ngayon, ang idagdag mo na lang dito ay yung parents net income na nakalimutan ko na kung magkano. Okay, your parents net income is not here. Pagbigyan nyo na ako from its own operation. Reported is 540. Nakalimutan ko na talaga. Kaya, 500 lang yan. Okay, so this one will be 660 minus 8,800. Makapag-calculator na para matapos na. 660 minus 8. Wait lang. Pahiya na naman ako. Minus, asa na? 8.8 equals 651. 651 plus, to check if our answer is correct, 37,800. Sir, ba't mo pa kasi pinapahaba? 689. Ganito kasi yan. Hindi lahat ng panahon given ito. Hindi lahat ng panahon given yung mga hinahanap. Kunyari, baka given yan, baka given ito. Tapos ang ipapahanap pala sa atin ay how much is the parents' net income from its own operation? Or how much is the minority interest in the net income? Pero instead na ang ibinigay sa atin ay ito. Diba? Baka hindi given yan. Kailangan mong mag-work back. At least pag alam natin ito, madali na lang hanapin yung mga ibang bagay. And take note, isang computation lang. Ang dami mong pwedeng isolve. The equity holdings of the parent or the consolidated net income as far as the parent is concerned. Ito yung pupunta sa consolidated retained earnings natin pag nagko-compute ka. This is also the net income, reported net income of the parent using the equity method. O, di ba? Ang daming gamit. Ito minority interest na to. Okay? And then, lumalabas din ito. Yung consolidated net income natin. Found in our income statement. Na kung saan ibabawas natin to get this one. Okay? Or sometimes, it's presented as this plus this equals that. O, diba? Isang computation lang, ang daming lumalabas na figures, and at the same time, na-check mo kung tama yung sagot mo because this plus this will always be equal to that column. Okay. Ano to? Non-controlling interest in the net assets of subsidiary consolidated net income and your consolidated accumulated profits. Okay, so i-check natin. Subsidiary companies net assets. Okay, you have the allocation difference. You have 11. This one is the beginning. Okay. And then you have the net increase. This one is the 400 plus 100, and this one is the 200 minus 50. Okay, so this is the net assets, minority interest na. I-check na natin kung tama yung, ayan, kung tama tayo. What is the beginning minority interest? Sige nga, kung naaalala nyo pa, 500 ang binayaran ni parent para sa 80%. Ang implied value nito ay 625 times 20%. That will be 125. So, bakit 125? Hindi po ba 500 times 20? 500 times 20%. So, hindi ba dapat 100,000? Yes. Pero, meron kasi tayong adjustment sa fair market value. Ang minority interest natin, it should be at fair market value. Tama po ba? Okay, so 125 was the beginning balance. And then, na-compute natin 37,800. Okay, minus the dividends. No? Wait lang. What's this? Minority interest net income from our previous slides. What about the dividends? Okay, the subsidiary declared 50,000 times 20%, it's 10,000. Wala na, hindi na kaya ng powers ko to. Let's try to compute at 125. Okay, plus beginning plus yung share niya sa net income. Diba, standard to sa mga equity, balance na equity, beginning plus net income minus net loss minus drawings or dividends. Minus dividends na 10,000. Huwag magkakamali. That's now your ending balance, 152,800. Accounts na lang, mas madali pa. Intindihin ito, 500 plus 150, 650, allocated difference na 125, less amortization na I prefer this approach. Ayan. It's like Rexona. It won't let you down. Okay? And ayun, ito pala oh. Ayan, parang nag-T accounts ka lang. So, ulitin natin. Okay? Wait lang. Is this already a summary? Yes. Let's try to compute for the accumulated profits. Ito kasi mga common questions eh. Na-solve na natin ito kanina. Ito, tsaka ito. Right? Okay, yung dito. Siya po ito. Ayan. This one. 651,200. I-screen capture nyo yan. 37,800. And then total is 689. Let's check if our answer is correct. There you go. 689 minus 37,800. EHP, equity, ano daw yung EHP? Equity holding of the parent in the net income of the subsidiary. Okay. I prefer to use consolidated net income as far as the parent is concerned. Okay, next. Ano pa yung mga total na tinatanong? Minority interest, na-compute na rin natin to kanina. Paano natin na-compute yan kanina? Siya po ito, P accounts na ito. Okay, next. Let's go to your consolidated retained earnings. Madali na lang yan, yung simpleng T accounts na lang. Magkano po ba yung retained earnings natin last year? Okay. Ano ba yung magandang approach dito? Kasi, kung titignan natin yung retained earnings mo, sabi niya it's 2591. Pwede kayang gamitin natin ito. Naku, magulo na naman. Okay. Ay, pwede pala. Parang T accounts lang. The parents' retained earnings at the beginning. Consolidated net income as far as the parent is concerned. Di ba? 651,200. Next, you have the dividends declared by the parent, which is 60,000. O siyang na ito. Ayan, minus 60,000 minus yan. And you will get the ending balance, which is 2,591,200. That's your consolidated retained earnings. Okay. So, I guess that's it. Okay. Tapos na. Try na lang natin i-check pa. Yung mga iba baka pwede tayong mag-reconcile. Ito, solve na yan. Wait lang, marami ng scrap paper dito. Sundan nyo na lang ito. Second year. O, sa second year na tayo. Ayan, net income, 225, dividends paid, 60. And then, after the parent will record the share. Sir, di ba i-record ito? Na-record na yan last year. Isang entry ka na lang eh. Debit to cash and credit dividend income na 48. Saan nang galing yan? Yung share niya dito sa 60. That is 60,000 times 80%. Okay, let's continue. Eto na. Naku, eto na. Sana nasusundan nyo ito. Okay, so you have the ordinary shares, 400. Bakit na ulit ito 250? Ito kasi may 100 last year plus 150 na nanggaling sa 200 minus 50. You remember from first year of operation, net income and then dividends declared? Yes? Okay. 520, sir, medyo nakakahilo. Oo, nakakahilo talaga because your investment in subsidiary is only 500,000. But now it's 520. And then, ano tong 130 na to? You remember from our T accounts? Ayan, yung beginning plus your share less the dividends, you get 130. This one is to eliminate the balances as of the date of acquisition. Okay? With the adjustment, of course, in the share in the profits. Dapat nga hindi yan at the date of acquisition. Mas maganda siguro at the beginning of the year. Ganun na lang. Ito yung sinasabi ko kanina, wala na yung inventories dahil nabenta na. And sir, bakit 54 na lang? Because it's supposed to be 60 at the date of acquisition, but ayan, na-amortize na yung 6. You have goodwill. Nakita na natin yung computation yan. Sir, paano po ito? Saan po nanggaling yan? Okay. If you get 80% of this, 80% of this, and 80% of this, you add them together. There you go. You will get 91,200. I-check natin. 60 plus 54, that will be how much? Ayan. Magkano yun? 114, di ba? 60 plus 54,000 equals times 80% equals 91,200. Okay? So, ganun din. Yung share ng minority interest sa adjustment and sa goodwill, dahil full goodwill tayo, you get the total and you'll get 22,800. What's this? This is just the amortization of the excess in your PPE. This is actually the depreciation. Sir, bakit ulit depreciation? Kasi nga understated yung equipment natin, kaya understated din yung depreciation expense. Pag tinaasan mo siya by 54, or 60 actually, okay, tataas din yung depreciation expense natin by 6. That's 60,000 divide that by 6. No, not 6. Instead, it's 10 years. Ayan. Okay. Kunyari nag-enjoy ka pa. Malapit na tayong matapos. 48 and 12. That's 80 and 20% of 60. Okay. And then you have the minority interest, your non-controlling interest in the net assets of the subsidiary. Okay. At saka sa net income. Okay. So, ayun. Ibabawas kasi, sir, bakit dinidebit pala to? May nag-question sa akin, so di ba net income dapat credit yan? Bakit natin yan dinedebit? Kasi ang minority interest net income or NCNIS is a deduction from your consolidated net income total, okay, to get the consolidated net income as far as the parent is concerned. Okay, so binabawas yan. Kaya siya naka-debit. Okay po? So, ayun. And bakit siya credit? Because this will increase the non-controlling interest in the net assets of the subsidiary. Naalala nyo yung T accounts ng minority interest. Okay? This will be increased by the share minority interest net income. Ayan. Plus or minus yung mga adjustments dapat natin. In this case, you have 225. Uninet na niya 225 less 6. Ito yung depreciation na adjustment. Ito naman yung total net income ng subsidiary times 20%. Okay po. Ito yung madugo ngayon, sir. Saan po nanggaling yung 111,200 na yan? Okay. Paano ko ba ito i-discuss? Let's try to simplify this. Kasi wala siya dito eh. Let's go back to the parents' net income. Ay consolidated retained earnings or simply the parents' retained earnings. Dito na lang. Because the parent is using the cost method, this is the accumulated profits of the parent. Okay po? If we've been using the equity method sana, the parent's consolidated retained earnings will be the same. No, the parent's retained earnings will be the same with the consolidated retained earnings. Wala sana tayong problema. But because we're using the cost method, ito yung retained earnings natin. Okay. Kung equity method sana, equal sana siya dito. So, ibig sabihin, meron pang hindi na-realize because we are using the cost method, dividend income lang yung pumapasok, hindi pumapasok sa income natin yung share sa subsidiaries net income and adjustment for amortization. May difference po sila. Yun po yun. Let's try to check. 2,591. 2,591. Ang saya-saya nito kunyari. Minus 2,480. Equals 111. Bakit 111,000? Mukhang may kulang yata. Wait, let me see. 2,591, 200 minus 2,480. Napapahiya ako nito. Tara! Ayun. 111,200. Yes. Siya po yun. The purpose of this journal entry is the purpose of this journal entry is to adjust the retained earnings of the parent, okay, by the unrecorded share or net increase in the subsidiaries net assets. Okay po? So, ayun. Okay. Now, another way is instead of debiting investment in subsidiary company shares, kasi nga cost method, dapat ito, adjustment na lang ito sa accumulated profits beginning balance. Pero dahil ang pangit nga naman tingnan and ang ginamit na nating account title ay ito, no? Lahat pinasok na natin dyan instead na 500 na lang. You can also use this approach. Okay? So, ayun. And we are almost done. Okay? So, for the second year, you now have your minority interest. Paano po na-compute yan? Okay? Yan. And yan. Or you can compute using the using the T accounts. Okay? So, magkano ba yung ending balance natin last year? It's 152,800. Okay? And then for this year, it's 43,800 yung minority interest net income. Ito yung beginning balance natin, no? And then yung share sa dineclare na 60 times 20%, you will have 12,000. So you should get 184,600. Okay, wait lang ha. Wait lang. Saan po nanggaling yung 43,800? Ayun, advance kasi. Ayan, so you have 45. Saan po nanggaling tong 45 na to? That's 225 times 20%. And then you have 20% of 645 minus 1, 2, you get 43,800. And your consolidated net income is 669. Okay, coming from the total of these two. This is the consolidated net income as far as the parent is concerned. Okay po, this is the parent's net income, pero pag ako ang nag-compute, ano ulit yung gagawin? Tatanggalin ko muna ito para hindi nakakalito. Diretso ako sa 450. Tapos ito 450. Parehas lang naman yan. Tanggalin mo yan. Tanggalin mo yan. Gawin mong 450. Now, it's easier to work back. Okay? Kung consolidated retained earnings naman, okay, ito yung papasok sa consolidated retained earnings natin. Ito yung papasok sa T accounts ng minority interest po natin. Okay, so, let's compute. What about your, sana nandito. Ayun, siya to. You have the parents, the consolidated retained earnings, beginning balance, plus the consolidated net income as far as the parent is concerned, less the declared dividends by the parent. You get the consolidated retained earnings at the end of the year. You can also use your T accounts. I-check nyo nga, dapat pareho po yung lalabas. Siya po ito. Okay? And then, as far as the subsidiary is concerned, ito naman yung kanyang retained earnings. Siguro ito papakita lang natin sa statement of consolidated retained earnings, no? Pero most of the time, hindi natin pinapakita to eh. Why? Because this is already a component of your minority interest, okay? Because in your balance sheet, no, you have your statement of, ayan, na-compute na. Bakit siya dinidebit? Kasi binabawas yan to arrive at this. Ano na yung dinidiscuss ko kanina? In your financial statements, ipapakita natin yung consolidated equity coming from the parent plus the minority interest. You add that and you will have your consolidated equity. Okay, so ayun. Which is supposed to be here. Kita nyo yun? Ayan. Kaya ito, puro sa parent yan. Look. You have the parent. You have the parang sa parent din. Consolidated retained earnings as far as the parent is concerned. Ito yung galing sa T accounts natin. O hindi natin dinagdag yung na-compute natin na retained earnings ng subsidiary, di ba? Instead, we add subsidiary, minority interest, di ba? Instead, we add the net assets, no? Yung share ng minority interest sa net assets. Also coming from your basic T accounts. Okay po? So, we are almost done. Ano yung mga pwede ninyong makuha dapat dito? Kaya, to answer the common questions. Number 1, siguro yung computation ng consolidated net income as far as the parent is concerned. And then you have your minority interest net income, also known as your NCNIs. And your total consolidated net income. Okay, you have here the parent's net income. Take note from its own operation, yung ginagawa ko. Kasi kung reported net income yan, it will include the dividend income coming from the subsidiary. So you have to deduct that. Pag sinabing from its own operation, the dividend coming from the subsidiary is already deducted. You have to be cautious, no? Because they can give you the same problem, iibahin lang yun instead of parents reported net income. Hindi, sasabihin niya, parents net income from its own operation. Sometimes they sound the same, lalo na kapag pagod tayo. Pero actually, magkaiba po yun. Okay? So, you have the parents net income from its own operation. There you go. Walang shares in minority interest. That is a component of your consolidated net income. And then you have the, oops, not the parent. You have the subsidiaries net income. Okay. Pagkahatian ng sa parent and minority interest, you have here the total. And then you have the amortization of excess. Now, eto, hindi palaging positive to, no, or negative. Wait, I'll just deduct. Deduct na lang kapag positive yan. Okay, this will come from the difference of fair market value and book value. Sir, paano po pag net loss si subsidiary? O di, i-negative mo yan. Sir, paano po pag net loss si parent? O di, i-negative mo rin to. Sir, paano pag yung amortization, kailan magiging positive or kailan magiging negative? Okay, so you come up with the allocation, the schedule for the allocation of excess, no? If the net allocation, no, has a fair market value greater than the book value, positive yan. Kaya kapag positive yan, ibabawas mo. Pag negative yan, idadagdag mo. Okay, so minus amortization. Pero sige, para hindi kayo malito, ikon ko na nga, tanggalin ko yan. Amortization of excess, so babawas. Like your inventory kanina and PPE. As of this point, eto lang muna. Because if there are intercompany transactions, patay, there will be adjustments for deferred gross profits and realized gross profits from inventories or from PPE transactions. Pero para hindi kayo mag-panic, dito lang muna tayo. You get the total. That's now the consolidated net income as far as the parent is concerned. You can use this as the equity holdings of the parent in the consolidated net income. Ayan. This is the minority interest net income or your non-controlling interest in the net income of the subsidiary. Okay, and then you have here your total consolidated net income. This one, importante yung dalawang yan. Because if you're computing for the consolidated retained earnings as far as the parent is concerned, madalas tanongin yan. You have here the beginning balance. You have here the consolidated net income as far as the parent is concerned, less the dividends declared by the parent equals the ending balance of your consolidated retained earnings, okay, for the parent. Ayan. And if you're computing for your minority interest or your nicknas naman, ay, nicknas pala, nicknas. This one is nicknas, this one is nicknas. You have here the beginning balance plus the minority interest in the net income plus the share of the minority interest in the dividends declared by the subsidiary. Uy, take note ha, share. Kasi dalawang pinupuntahan yan, okay? Sa parent yung majority and then yung share nila. And then from there, you will now have the ending balance of your minority interest. O, di ba? So, ang saya-saya. Ayan, pwede nyong idagdag sa mga cheat sheets ninyo. Okay po? Ano pa yung kailangan nyong maalala? Dapat ito at fair market value po siya. Okay, now, sometimes you will be asked to compute for the how much is the consolidated retained earnings in the statement of equity or statement of consolidated retained earnings. Tapos kinompute mo, ay, bakit wala ito? Now, kapay mo, baka hindi yan ang tinatanong. Baka ang tinatanong is the consolidated retained earnings as computed yan plus, okay, the retained earnings of the minority interest. Okay, and if that's the case, okay, you are going to use this. You can have a separate P account for that, beginning retained earnings plus minority interest net income. Ganun na naman. Okay, dividends, share sa dividends ng subsidiary, and you have the ending balance. Yung mga modifications natin dito. Okay po, and nakadalawang oras na tayo. Grabe. That's it, and thank you.